This is Ayode Jebo 2.0 for you here this morning around the marketplace. We talk about the falling yields on Nigeria's treasury bills and Naira bonds, and you heard the Eurobond market's been relatively quiet, at least for now, with those billions we had out there. But let's bring it back and beyond the fixed income. Ayode, thank you very much for sticking around here. The last question was more about what foreign investors are thinking. I'm interested. The charity begins at home. So what are local investors thinking right now? Yeah. Are they getting scared of the entire political noise getting louder on a daily basis, or they're worried about whether it is headsmen, whatever it is, the killings? Nigeria is what I call the killing fields.
Yeah, interesting. The domestic investors too are also exhibiting that concern in terms of the political concern. But some of them are just trying to rebalance, restructure their portfolio, exit from the equities market, and try to place some fund within the fixed income market. Trying to approach, pending the end of the year, we expect that maybe if prices go down, prices become very attractive, they will be able to see some opportunities, especially within the equities market. So trying to position that as we approach elections, foreign investors will reduce their own position. As a result, prices would decline, and gives them opportunity. For them, they have more idea in terms of how politics is played within the local environment. They have more understanding
about that. Like you're doing a home play on your own field, in your own stadium, in an EPL. Isn't it?
Exactly.
What's it called? Home advantage.
Home advantage. They understand that whether it's the incumbent that remains in power or there's a change of policy, Nigeria would still remain as a country, and they will just flow with whatever government that will be in place. So that they are trying to also identify opportunities before then. But we standing within the equity space, we expect that for companies based on their results will also try to shape the investor sentiment within the market.
Are folks right now looking at the election as another curve in our history or in our calendar that they want to make some money very quickly before the politicians jump into the arena and the money may not really be flowing towards Broad Street?
Yeah, it's we may not necessarily be flowing towards Broad Street, but you also expect as you approach election, there's more liquidity within the system. So depending
we understand, and I'm going to cut in respectfully. We know that most of the political monies during elections don't go into stocks or fixed income. We know where they go.
Yes, we know where
folks buy more land, build more houses, they buy more cars.
Yes, also save events like fixed income investment. Some of them also willing to secure their investment, because you don't know after the election you still need to continue and live your life. So
some of the political spending may find its way into Naira bond and treasury bills.
Exactly. Yeah, because you need to also preserve some form of capital beyond the election. Real estate may not be that liquid.
So for those who will benefit from the juicy multi-billion dollar that will be spent on 2019 elections, they should think about investing in stocks, bonds, treasury bills.
Yeah, exactly. Because for when you look at the way the real estate market is in Nigeria, it's not that very liquid, and in terms of even the value placed on assets are not realistic when we want to check and compare to.
When you look out of your office, I'm sure you've seen a lot of to let down there.
Exactly.
Where your office is based. You may be wondering, this is not a good time to put money in these high-rise apartments with no occupancy.
Exactly. And
so if also fixed income at 9%, 10%, 11%, 12% may look like good money to just, I don't want to use the word hide away, but put some of your political takeaways into.
Yes, because when you also look at them in terms of effective yield, true yield of some of these investment, even when you look at currently even for 364 days, which we expect maybe may close below 13, when you look at the yield, it's still significantly high as 15%. That's in terms of effective yield, because they are discounted instruments. So when you compare them to other products, it may still be able to give you as much return that covers covers beyond the return you get from those other products. And for most companies, the tax advantage, they also try to take advantage of that. So by the time you factor that in, that's like 16.7, the north of 17% when you look at the effective yield on some of these fixed income instruments, because they are taxed.
Smart. So I just put some of that now, and I wait until May 27 or May 29, 2019 elections and swearing in, and then I go knock on your door and say, thank you very much. May I have some of this money back?
Exactly.
But are investors right now chasing inflation? Is there this sentiment that this inflation trending lower on a monthly basis, 14 consecutive months, is there faith there for local investors that, look, this is going to keep declining? We believe this,
yes.
whether it is base effect, whatever it is, but we believe that this will keep trending lower, and at some point, the central bank will cut interest rates and might just lock in some money.
Yes, and that's why we've seen significant interest in medium to long-term investment. So you expect that rates will drop, and you see more people trying to invest and lock in or go long on some of the investments, so that they are able to benefit from this higher rate when you are comparing to expected and decline in rates. So we'll continue to see more interest in long-term instruments, especially for OMO, the long end of the OMO tenors, that a lot of investors will also be trying to take advantage of that to lock in their investment and to shield against any decline in rates.